go. And hey, Tom here, FlipAnythingUSA. So it's Saturday morning. I've got Chris here with me. Let me get my glasses on.
Hey guys.
And today, Chris and I were talking, and we thought, you know what, we haven't really, we were talking about Grant Cardone's advice he was given a while back, and we realized, we should go back and look at that and kind of see, some of his predictions and some of his advice, and of course, neither one of us were too impressed with it, but.
I mean, it's
word. You don't want to say that word.
Sorry.
Yeah. Anyways, we can't use that one on the show, otherwise it'll YouTube frowns on it. Let me put it that way.
Gotcha.
Anyways, so Grant, since that time, had made a couple videos, and he seemed really like he was heavily under stress, and to me, he kind of looked like he was melting down a bit. But anyways, he was quite emphatic that you should sell your home, and your cash is trash, and you should invest it with Cardone Capital. Hey, good morning. Glad you're here, Max. And funny buddy, glad you're here this morning too. Also, we'll talk about, we're going to, we go into our Zoom meeting for our informal before the class. That's going to be at 11, so those of you that are in the mentorship, we'll be starting that at 11. But we're going to get that going in a minute, and we'll be right back. All right, let me get Chris in here. Chris, let me get you in here. You were just saying you hit a milestone with your Airbnbs, right?
Yeah. Had a all-time, record month, and cash flowing extremely well. And then the mortgage, it's a traditional 30-year mortgage on the property, conventional. And I think we pay $1,086 a month, and we're projected to make a little over $5,000 this month, and so you got to take out cleaning fees.
What's your operating cost overall? 'Cause
every month?
Yeah.
So every month the operating cost sits probably right around $1,400.
Okay, so you got $3,500. Roughly,
yeah,
with a good month of $5,000 coming in,
yeah,
and that's great. And you guys know I've been telling you I've been late to get in the studio and different things, and apologize. One of the reasons is because I've been in a frantic pace trying to get my money reinvested with these 1031s that I've been under the gun on, and I do have 2 signed deals now. One is 5 acres, industrial property, has a couple buildings on it.
Closer to the mic, they said.
I'm sorry. Thanks. I did get a couple deals signed. Finally, they're inked. They're inked, as we say. So I've got them firm. They're in escrow. I've got a 5 acre piece. That's an industrial piece of property. It can go actually either way. But I'm thinking about putting a little industrial park. It's already partially there as it is because it has a building or two, and it has some. So I'm going to put out $1 million for this thing, and really, it's all about land value. It's all land value. I could have bought a similar property that had nothing on it for about the same. It was about the same location. This is not on the going to work side of the road. I'm sorry, it is the going to work side of the road, not the going home side of the road. But that's okay because this is part of the work. It's going to be an industrial park. At least that's the plan so far. And then the other one I got is a little commercial office complex. It's zoned for that. Another property, and I'm looking at building on that, and it actually is just barren property, and so anyways, that's what's going on. So things are finally, not under the gun quite so much now. It's a relief to have these things designated. All right. So look, I thought we'd just play around. This is like a 7-minute video. We can watch this and discuss, maybe whatever points he's made or hasn't made. We just briefly breezed over it. We remembered a couple things. We certainly remembered what he's saying about, get rid of your homes. Well, this is the one I did the Freudian slip video on. So let's take a watch.
Friends out there, all my investor friends, family, my friends, customers. This is Cardone Capital behind me. We are open for business, okay? We're open for business, and my biggest competition, as Ryan says, my biggest competition in the stock market is clearly getting his nuts clipped, okay? $10 trillion has been lost, and more will be on its way. I'm not wishing this on anybody. Look, guys, I have told you for, I don't even know how long. I don't know, 18 months? Probably 4,000 or 5,000 points ago. Get out of the stock market. I've also told you. Now, I know there's a bunch of haters out there hating on me like, oh, yeah, you say anything long enough, you're going to be right. That's not true. I told you, sell your homes.
Well, one thing I'll say, he was making the prediction the stock market was going to crash when the stock market crashed. But, yeah, I mean, he was encouraging people always to send the money. He always has a tendency to say, cash is trash.
Sure. Yeah. Now, Tom, I've heard you say before, I don't know this exactly to be true, but I make up in my mind that you don't have money in the stock market.
No, I say my people ask me about the stock market, and I say my stock is on my shelves, and that's pretty much it.
Yeah. So, from where I sit, and I've got money in the stock market. I have for a while, and it's funny. I'm actually thinking about buying another home because when you know that you know a good deal in real estate, it's kind of like, why would you wait for that good deal to come across your lap in the stock market and wonder when that's going to happen versus you've got a good deal sitting right in front of you. You can appreciate your funds tremendously quickly.
Yeah. I just I agree with you. I can tell you that with the stock market, and my boys love the stocks. They trade. I got them opened up a couple of accounts for them, and with their own money. They're using their money, not my money. And they've been playing with it, and they're interested in it. But anyways, what I was going to refer to with Grant is, he just saw the stock market sink, but he also saw he also went into shock himself at the same time. Because this terribly affected him. Just think about it. He could no longer, he has a jet to fly him to these places all over the country, all over the world, really, to do his seminars and stuff like that. And, he was kind of amused with the stock market, being balled up at the time. But at the same time, he was jammed up more than anybody, and you could kind of tell he was really sweating it. He was really sweating it in this video. But let's keep listening to what he said. Just the fact that he was giddy that the stock market was, getting its nuts clipped, and as he kind of fell apart in the weeks following this too, because his own nuts got clipped, really, for a lot of reasons. You're covering your screen, by the way.
Sorry.
Told you guys, if you got a house, sell it. There's going to be a housing crash in the U.S. of America. The stock market has already dropped. It will continue to drop. Where are you going to put your dough? Where are you going to put your money? You cannot leave it at the bank. I've been telling you that as well. Do not leave your money in the bank. You're going to be paid nothing. Actually, you're going to be charged to keep money at the bank going forward. This is a new economy, a new time. It is all the rules that you've been playing by. You've been punished by it long enough. Now they just got stripped like a Band-Aid, just ripped right off your knee. Okay? This is a new time, folks. This is what I'm suggesting everybody do. Do what I'm doing. I invest all my cash into real assets that produce cash flow. That's an office building behind you. That is not what you would invest in, okay? Office buildings will get crushed.
Yeah, this is the one that I thought, this is where he made his Freudian slip, I thought. Well, somebody says we got a mic problem. Are we okay right now? Do you hear me fine?
I hear you. All right. Got
Okay, thumbs up. Okay. Well, anyhow, so Grant, this is where he points to his own office building and he says, that's not what you want to invest in. And then that's not what you want to invest in. He points to another commercial center, I think, and then he points over to some apartment buildings and says, that's where you want your money. And but we'll let him continue here. But it's kind of funny. You'll see what he does after this.
Those will get crushed. That right there will save your day. Okay, if you could go buy that piece of real estate right there, good. That right there, bad. Cardone Enterprises, that's not what you want to invest in.
That was funny.
Well, and again, he says you want to invest in this and not this, but as you always say, Tom, there's no such thing as bad real estate. There's just bad deals, right?
Yeah, that's the truth. But the point on this is what's funny is he's pointing to his own office building,
right?
And he says that's not what you want to invest in. Now he's referring to commercial real estate, but then listen how he finishes this. Listen to this.
Because that is dependent upon a tenant being in business.
And he's the tenant. That's what's so funny about that. All right, let's keep listening.
Look, I only have one interest in doing this. I already know where my money's good. We distributed $2 million to our investors last month. $800,000 of that went to me last month.
Now, you know what's funny? He just said he distributed $2 million, $1.2 million to investors, $800,000 to himself. So, I mean, I'm a numbers guy. So the first thing I'm thinking, well, that's a 40-60 split. So he gets 40% of that. I'm kind of wondering, is that the norm? Does anybody here know? Has anybody ever invested with Cardone Capital? He says he's got 3,200 investors, and I haven't heard one testimonial saying how happy they are, or I haven't really heard a testimonial either way. I haven't heard of anybody. Maybe one person once.
Didn't we have one person in the mentorship actually?
Some guy, but he didn't answer enough questions. I don't really believe he was in anything.
Okay.
He just because I said, well, what's your return? And then he never said a thing, unless maybe they've got some sort of disclosure. But anyways, this I listen. I don't like it. When I saw this, and then he did another one after this. Well, you'll see how this progresses, and it looks like to me like a guy that is just under a terrible amount of stress and strain, and I don't like seeing anybody suffer, but when somebody's telling you cash is shit and cash is trash and send it to me and don't put your money in the bank, send it to me, listen, cash is trash. Try to go buy groceries without cash, so I was, I just, it speaks for itself. But let's keep watching.
Rental property. People have to live somewhere. They have to drink water. They have to eat food. Okay, they need entertainment. So they're going to buy Netflix. They're going to watch their Apple TV. They're going to keep their telephone. They're going to drink water. They're going to drink food. They're going to have food delivered to the house. Maybe they're not going to go to a restaurant for a couple months.
I don't know. He's struggling for things to say, and I get it, and that happens to everybody that's on camera sometimes. But anyways, I just thought it's interesting how different businesses have been affected. Look at what Zoom's happened to Zoom. I have seen people suffering a lot, really, that own apartment buildings. One of my buddies, he was sweating it terribly, and he might have even sold his property to Grant Cardone. I don't know. He sold it to some outfit that was a big outfit, and he was freaked out because he had just got it up to about 95% occupied, which is really hard to get, with a big number of apartments that he had. And he had it sold, had it in escrow, and he said this stuff was going on. This stuff was going on that everybody's concerned about. And what happened was they hit him for another $30,000, kind of in an underhanded way, he felt. But he just said, I'll let it go. He was angry. So angry. He's kind of guy that he is kind of like me. If somebody gets you angry, you just say, forget it. Sell to somebody else, even if I lose money, lose more. And I was just angry. And what he did was he went ahead and ate it and let it go. But that apartment building is now 70% occupied. So It took a 20% hit. Because, it's not you worry about people not paying their rent, of course, but the other thing is you worry about people saying, you know what, I got to downsize. I got to cut my overhead.
Yeah, can we talk about that for a second, Tom? Because I'm not familiar with apartment buildings, and maybe there's people out there that maybe not right now, but might be interested. Like, as far as occupancy rate goes, what are you usually shooting for?
I've been 100% full on. I had 58 units, and I made a couple $1 million on them, and in the resale when I sold them. But what I was getting at is what you will see happen when somebody loses a job in an apartment complex. They'll go move in with their neighbor or their friend that they know, and now they're paying for one apartment, or they split an apartment, and people start moving in, and kids move home, and they give up apartments. It's bad enough worrying about people paying rent, but you also worry about refilling them, because the problem is when you have to refill an apartment building, or 5 units, whatever, almost every time it requires repainting. There's little scuffs on the walls. I mean, especially Grant tends to go for the high end stuff. Everything's got to be redone. We call it not make ready. Call them make readies, and make it ready. And it costs money to make everything ready. You got to have carpet cleaners come back in, and everybody's got. It doesn't matter how long they've been there. You almost have to go through the whole routine. You want everything smell like new if you're going to keep your property nice. And I know you keep your property nice.
Yeah.
So, anyways, but anyways,
let's see what else he has to say.
Yeah.
But they're going to have to live someplace. Okay, if you own a home now, you're probably not going to be able to sell your house now. So get over that, because it's not going to go away, or you're going to have to take a loss to sell it.
I disagree.
Yeah. Well, I mean, I think the market it froze is what happened. The market kind of froze, and people have lost jobs. And I mean, United Airlines is laying off 40,000 people, is what I understand. American Airlines, I hear, is laying off some. And so there are jobs going away. There's definitely jobs have gone away. And I know engineers that are no longer going to office. They're going to quit officing. So that could affect people like me that own offices and stuff like that. But really, I've been only mildly affected. I would say I've been less affected, and I own the properties that he pointed to, said that you shouldn't have, and than I think he has.
But I think you bring up an interesting point, as far as officing goes, because some people are going to be officing from home. And
that's working and not working.
But I think some companies are realizing with Zoom and whatnot, hey, this might be a new way of doing things. And some people are already getting the go ahead of this is the way we're going to do things. And so some people are now saying, I'm shopping for a different home.
Yeah, what I think is, it seems to me, and I sold some homes right away. I was already planning on selling some homes, but I doubled the amount of homes I was going to sell. I went from 4 to 8 and maybe even 10. I'm backing off on it a little bit, but because I already sold 4, maybe 5 now. But the thing is some people had money, the economy was going good, and I think I worried about when the Band-Aid goes away, and meaning we got aid that's carrying people through, but when that dries up, and it kind of has dried up, and now, President Trump's doing something new, and he's made some emergency aid. He made a presidential order, so people are getting a bailout again, and so that's going to help. But at the same time, people that had money, I think, decided, you know what, we're going to buy a home, and a lot of people did start buying homes. And being cooped up in an apartment complex, I mean that would be stifling to me. I don't think I could handle it. And I got to have some air. I got to have some yard. I mean, I live on a few acres already, and So I don't know, but anybody, just being any size yard would be fine, But it's just too cramped. But I haven't seen the problems that he said that would happen. So let's keep going.
So the reason I don't like your house is because it doesn't produce cash flow. If you have a house already, what you could consider doing and might want to consider doing is getting a loan, refinancing your house at 2 or 2.5%. And use the equity to get invested in cash flow. Again.
Okay, now we know where that's going. Send it to him. Although that's kind of he's kind of contradicting himself, because he said earlier, forget about your house, you ain't going to be able to sell it. If you can't sell it, you ain't going to be able to refi it either.
Right.
Yeah. You want to do this on your own? Go do it on your own, okay? You want to go buy that property right there? That one right there, all the way down that block.
I do want to do it on my own, actually.
Yeah, I know. Yeah, well, he says you want to buy that building.
Right.
So, see, that's kind of his routine. He says, this is the best investment. This is the best asset there is. And he points to a 10 million plus building that, almost nobody's going to be able to buy by themselves, okay? And he knows that. So but he points to it because it's kind of like, here's the problem. That's what you need. It's more than you can afford. And here's the solution. You can pitch in with me and get it.
Yeah, but Tom, one of the things that I think I've learned the most from you through the mentorship, reading your book, Wake Up and Smell the Real Estate, is you don't, just from my background where I come from, I look at those kind of buildings, or I look at even expensive houses, and the first thought that crosses my mind is, I can't afford that. But the way you explain it and the way you teach us is, it's not whether or not you can afford it or not. It's, can you find the deal? Can you pitch it to somebody else? Can you make money off of it?
Yeah.
There's always a way that you can actually do it on your own.
You can. The thing is you can get it. You can, instead of buying a 200 unit, you'll buy a duplex, okay? And if you saw Ron, Ron who bought my book, and he started buying home, took the mentorship, and he's made over $200,000 by his own estimate, or more than 200,000, I should say. That's the thing. You want to hold the reins yourself, and you want to control the asset. He controls the asset. You send your money to Cardone Capital. He controls the asset, not you. Right. And that's not comfortable for me at all. And think about this. You got that. If you got your money in your own asset, like actually Ron who was on here, and he'll hopefully be in the meeting a little later, he said it so well. He bought a property for $70,000, and then he went down and got it appraised after he put $10,000 in. I think he paid $60,000, put $10,000 into it. So, and then he got it appraised from the bank at $150,000. That's a credible appraisal, because they came back, and he could have borrowed more, but he borrowed $100,000 against the asset. So he got all of his money back, plus $30,000 in his pocket, and now he's got an asset that's producing cash flow, and he's got $50,000 equity that he can borrow on. See, that's the difference. If you had your money in with Cardone Capital or that type of investment, you're not going to be able to go down to the bank and say, hey, I want to borrow against this. Right. They're not going to give it to you. They can't tie it up. Otherwise, there'd be, if he's got 100 partners, and they're not going to do 100 second trust deeds, which, let me just tell you something, guys. This is something a lot of people don't know this. A lot of people don't know this. This is a good tip, is sometimes you have a first trust deed, okay, meaning you're in the first position. If somebody owes you money, you can have a note secured by first trust deed, okay? Well, you can also have two first trust deeds of equal value. They're of equal importance, meaning one doesn't have a priority over the other. Once in a while, you get people that, neither one of them wants to be in the second position, but so they carry the note. They'll say, we want two notes. I don't want my sister's note. If it's like kids, inheriting, or, and they're going to carry the note, they can have two first trust deeds that are of equal ranking. And the bottom line is, one doesn't have any priority over the other. But just something to mention. Let's keep watching.
Covers that entire block. It's full of tenants. Those tenants aren't going anyplace. Those tenants are going to stay there even if they lose their jobs. But it looks like the government's going to come in and fund this thing. It looks like Trump's going to do something really, really big to help people out for the next 2 or 3 months. That'll help people pay their rent, make their car payments, pay off their credit cards. But you still need to figure out some place to invest your money. Where are you going to invest your money, okay? Where are you going to put your cash? Because the banks aren't going to pay you anything, and you need cash flow. And if we're moving into a time of uncertainty, what makes people certain? Cash flow. Okay? Look, I've been through this before, folks. I'm 62 years old. I've been through this more than once. I survived 1995. Most of you don't even know what happened in 1995. The pundits on TV don't even talk about it. It was the credit and loan debacle. 1,600 banks went underwater. 2001, I survived that. 2008, I survived it. All my buddies went busted in 2008. 2000, the 9/11 crash. This thing that we're going through right now is bigger than 9/11, 2000, $19.95 all combined. Plus you could add Sandy and Katrina to it. This is enormous. Take your cash out of the banks that might not be solvent in the future. Take your cash out of the banks and get invested in real assets. If you can go buy them yourself, go buy them yourself, okay? If you need a partner like me, because I know what I'm doing, I've been doing it 30 years.
If you want, maybe you'll talk for a little bit. Just
Locations are vital. The location you pick is vital. Not just today, but 3 years, 5 years, 10 years from now.
Now that's all fair advice. And get your, I mean, I wouldn't take all your cash out of the bank. I'd keep a little cash on hand, to be honest. But buying assets, buying your own stuff, and putting them in assets that create cash flow, I totally believe that. That's what I do. But I also like buying stuff that I can flip right away to create more cash to buy bigger assets. And that's how you roll into bigger and bigger things. And at some point you'll be comfortable enough. You got cash in the bank and you have cash flow from the assets that you've created. The difference is I don't believe in handing your cash to someone like Grant Cardone to invest for you. And if that split that he mentioned earlier, 800 for him, 1.2 for the investors, that's a 60-40 split. Unless he's putting in 40%, I wouldn't touch it. But
Hey Tom, so on that real quick, so because I know you've done both. You flip, houses or commercial or whatnot. Sometimes it's a couple $100,000, sometimes millions of dollars. Is there advantage over having a lot of small assets that add up to a big net worth versus just one or two giant assets?
There's economies of scale. When you have a bigger property, your costs are going to go down. But also the more little assets you have that are near each other, and if you guys know, I talk about the barbell, right? Where I buy everything around my home, and I buy everything around my office, and I buy stuff in between. Well, that's because I can have a maintenance person, full-time crew that I have working for me, and other, I have electricians, I have AC guys. When they go to take care of one property in the neighborhood, I can say, hey, also take care of this one and this one and this one. And, you become a bigger customer and you save money because they can do, they see 3 jobs on the same street. Mm-hmm. So there's some advantage to that. But also there's advantages into, rather than having a couple little individual, I love commercial, I love office. Houses are a pain because you got to keep the lawns mowed. If the tenant doesn't keep the lawn mowed, then you got to send somebody over there and you got to tell your tenant, look, I'm billing you for the landscaping this month because you're supposed to keep it up and you're not. So there's just, but you got to start somewhere. But houses are great for just buying and flipping primarily. Once they become worth over $300,000, I find them to be they begin to lose their appeal to me because the cap rate goes down. They don't bring as much, and then you're better off like $300,000 as they go up above that. And this is just in general. I'd say it's most of the country. You can sell it, and then just go back and buy 2 more. Buy them right at 200, and then wait till they both go up to about 300, or
And also, if you had multiple houses versus maybe like an industrial park with just a few tenants. The turnover is probably not going to be as much to keep up with.
It depends. People stay in houses, but people stay in businesses for years. Many, many years. But I've had tenants that stayed in houses for 15 years and move. I buy another house and they move to the house that I just bought. I showed that the other day. I had a house that I bought for $130,000, and I sold it for $430,000. And that tenant, I said, look, I got another place you can move into. Your rent will be about the same, but it's about 2 more miles or 4 more miles out from here. It's further away from town. He took it, and so he went from an asset he paid me the same rent in an asset that was worth $500,000 damn near, and now he's paying me the same rent in an asset I paid $200,000 for. So that's all. Let's listen to the rest of what Grant says, and we'll wrap this up.
The cash flow, you got to have a certain amount of cash flow based on a certain amount of vacancy, because you're going to have vacancy. We figure down to about 85%. That means with 15% not occupied, we still cash flow and still pay our investors. Okay, so you also have to know how to get great debt. Our last loan was 3.13%. 10 years interest only, so we have stability the entire time we own it. The last thing I need to tell you is when you invest in these kind of assets, that asset will not go away. We'll be here 30 years from now. It'll be longer than Facebook will be around. Last thing you need to know is you got to be in it for the long term. You have to know your location, your investment, your cost of operations over long periods of time. If you want to invest with me, if you got cash, you got an IRA, you got a 401k, and you got a good attitude, and a long-term horizon, you're in it for protect your dough, get your cash flow, and get capital appreciation over long periods of time. If that's you and you got a good attitude, and you ain't a little bitch, you ain't a little baby, you ain't a crybaby, you ain't stupid.
Now, this is really a low point for him. I'm telling you. This is the way, I mean, I just can't even imagine. Can you imagine somebody talking to you?
If I was at all interested up to that point, I think that's where you lost me. Yeah,
well, it should give anybody pause. Somebody's talking like that. I mean, it just doesn't make any sense at all. Anyways, I just thought, God, this is actually my first impression of Grant, by the way. This was the first video I ever watched of Grant Cardone, and I don't even know why, but it motivated me to make a video about him too. So, anyways.
Stupid baby, you ain't dumb. Yeah, I need my money. I got to buy a Rolex, dude. If you're really, ladies and gentlemen, if you're trying to protect your money and your family's money over long periods of time, this is the best asset class you can be in. If you got a house, refinance it right now because you're not going to be able to sell it. Okay, if you got a job, you need to get great at your job because you might not have your job 6 months from now. If you got cash in the bank and think that the cash in the bank is your security, you're freaking hallucinating. It is not security. You need cash flow. Cash flow is security. Invest with me at CardoneCapital.com. I'll never let you down. If you're not going to invest with me at CardoneCapital.com, figure out how to do these deals by yourself. Your family will thank you for generations to come. God bless you. Peace, love.
Really highly paid.
Anyways, yeah. So.
It sounds like.
Hey, Natalie, you killing it? You killing it?
Yeah, I was killing it.
Huh? Because you showed up.
My goal is to.
It sounds like if I need my cash for something, I'm not going to be able to really get it right away.
Yeah, no,
and I don't want to buy a Rolex.
Yeah, well, the thing is even if you did want to buy a Rolex, it shouldn't be a problem, right?
Right.
I mean,
if it's your money.
That's probably the biggest issue I have with any of it, with his whole deal is, and that really came out quite clear. If he sounded like somebody. I mean, that's why he looked like he was in such a panic. And I just kind of was just thinking, yeah, well, he's got a jet that's to ferry him around to the seminars that he does. Well, those are dead. They're not allowing it. You can't do a seminar. You can't have the big gatherings. You can't have people together like that. And so, boom, seminar business down. So don't even need the people on the phone in his building, selling seminar seats. So the tours are over, right? And then you got everybody stuck inside their homes. That was probably, he's got a captive audience, probably the one good thing. And, they're just the opportunities for sales have just down the tubes. And so I guess seeing him come apart like that or seem so rattled, and to talk about, he's basically describing somebody asking for their money back, right? Isn't that what you came away with?
Yeah.
So hey, I want to pull some money out.
Yeah.
Or and see, that's the thing,
Or he wants more money, and so he's just trying to grab more investors.
Yeah, well, you think about that. That's kind of what Bernie Madoff's, and I'm not saying they're the same. I think he's got a legitimate company. But Bernie Madoff, that's what threw him into turmoil. Everybody panicked, and they wanted their money. And they were calling up. They said, Bernie, we need our money. I want my money. I want my money. Well, there wasn't no money. There wasn't no money.
Right.
And so, Grant, in that excited way that he was responding, being upset that somebody wants their money because they want to buy a Rolex. I mean, why should he care? I mean, he's not your daddy. I mean,
right.
You invest with him and say, hey, why do you need your money? Well, does it matter? What's it matter?
Yeah.
So I don't like that. I don't like my capital being trapped and controlled by anybody else. Anybody will tell you, the very, very few partnerships I've had, I've been the two-thirds owner. And that's because I hold the reins. But I also have the majority interest because I have the majority at stake. I'm the majority investor, meaning I've invested the majority of the cash. And, that's how it should be.
Yeah. Yeah. And, he did point out in the video, he said once or twice, you're not going to be able to sell your house, or you can't sell your house. Mitchell just said in the comments, he's like, I'm selling 2 houses right now. So way to go, Mitchell. I hope you're making some good money on that. My mom and dad, they put their house up on the market yesterday. They're looking at a different property they want to purchase for retirement, and they already have 3 or 4 offers. And as you said, Tom, maybe it's priced too low. But I mean, it's close to market value. And, anyway.
Cool.
I don't know.
Yeah.
What else, Tom?
Yeah, I don't know. Let's see. We got to get ready for the next deal. We got to do at 11 here. But anybody got any questions? Anybody got anything going on? Want to share something? You got the 2 houses in Mitchell. That's cool. Yeah, look, people are asking me all the time, what's the market going to do? And, short answer is I don't know. I don't know. There's opportunities that come out of every crisis. I've seen businesses that have expanded. I've seen businesses that have shrunk. I've seen people that are hurting, and I've seen people thriving from it. The ones that are really getting hurt the most, to me, in my opinion, is the bars. And I know some gyms have closed, but I've seen gyms are coming back. I actually had a gym. This is actually funny. I had a gym. A guy wanted to rent some space from me, and this is just yesterday. And we figured out, this isn't going to work. It wouldn't work because he needed more parking. There just wasn't adequate parking. I said, no, don't fool yourself. It isn't going to work. So I said, no. And he thought, well, maybe I can park on the neighboring properties. I said, nah. I said, that'll work for a little while, but then it'll end. And we don't want that to happen. But it was funny because as he was leaving, he saw my book, and he goes, hey, are you Tom? So that's twice now. Chris was the first. So I thought that was funny.
Yeah. Yeah.
But anyways, as far as investing goes, I'm telling you, just base it on what things are doing right now. I know I can tell you that it seems there's still a lot of hope for homes that are under $300,000 maintaining their values. I mean, I cut a few of them loose because I want cash on hand. I don't want to be cut short. And of course, I've reinvested that in land, and land's negative, but I'm prepared to handle the negatives associated with that. The property that I just bought or I'm buying for $1 million, I'm putting $400,000 down on that. I'll borrow the balance, or I may put a couple hundred more on it, but either way, I'll owe at least half that. And right now, there's currently an income coming in of about $2,000 between the 2 buildings that are on there, but they should be bringing in $4,500 for sure. And there's actually another asset that isn't being utilized on the property that can be rented, and so that may bring in another couple grand. So
that's great.
So if I can get $6,000, and really, like I said, this is $6,000 that's going to help me hold the property for an extended amount of time until I build it out. That makes sense. So these are the kind of things that you guys got to think about for yourselves. But the bottom line is your hedge with every purchase is that it's got to be worth more than you're paying for it. It has to be worth more than you're paying for it. Otherwise, don't buy it. Don't buy it. Don't be a speculator, because especially right now, because you just don't know the future. I see guys, whatever. When I see some yo-yo that's under 30 that's telling people how to invest in the stock market or even real estate or making making bold,
They haven't been around long enough.
Well, I mean, or I think, you have to have lived through a few things before.
Well, it's interesting.
And nobody can really predict it exactly.
Well, somebody told me once upon a time, and one of my former jobs, they said you should never write a book or be an author before you're 40 years old.
Oh, is that right?
On a subject, because you just haven't seen enough. You don't know enough.
Yeah.
I mean, there's some really smart people out there. Don't get me wrong.
Sure.
But you have the experience.
Well, I'm not even talking about just real estate. I just mean, it's like that Ron said. His to do is to know.
Yeah.
If you've done it, you know. but you have to have done it to know. And so I don't mind anybody. I mean, if somebody demonstrates expertise at something, then have at it. You know, show what you know. But
Right.
but it's like I remember Ross Perot when he was arguing in a debate, and he was talking about extrapolating. It was Clinton he was actually fighting at the time, but he said, he goes, I wouldn't extrapolate, that because I run a cashier that I can run a chain of Walmarts. You know what I mean?
Sure.
Yeah, it's just too much. Yeah, but I don't take it lightly ever predicting doom and gloom or that things are going to get great because, I gauge it for myself. But I will say this, economy is doing great until we had the problem that we had. And a lot of that stuff is still in place. So I think some parts of us, some of the labor force is getting hurt because I see the numbers. I can see some of the numbers. But you can see it coming back really, really fast. A lot of the jobs that were lost are coming back really, really fast. But,
On the video we just watched with Grant and talking about experts in the field, we've got people watching that maybe they do have a little bit of seed money. They've got some capital or they're thinking about selling and reinvesting. There's people out there that can more or less fool you that they are an expert in the field. They want your money. They'll take it.
Oh, yeah, sure.
What would you say to them? How can you sniff out who's a fake and who's the real deal, and how to be careful? I guess that's what I'm trying to say. Because I have friends, I was talking to somebody recently. I told them I was getting into real estate, and they said, be careful because my wife and I, we just finally paid off the seminar that we went to.
Oh,
and
yeah,
it was $10,000.
Yeah, I know somebody got hit for twice that. Well, and it's a good question. And the thing is, just look at it like if you're going to hire a plumber, right? You don't hire anybody to remodel. You don't hire anybody to do anything for you without references, right? References. And if, and that's, talking about the fake gurus and stuff, that's what they lack. They lack references, right? You can say you've done, and you can say, look, I'm wealthy and I got this and I got this and I got this. But what does that mean to you that they have money? How did you make it? Can you show how you made it? You got to have references and referrals. You got to be able to point to, that's what I do. And you guys know with my book, I point to specifics so you can see what I'm talking about, land that I've made profit on, houses, buildings, whatever. If you haven't done it, you don't know it. It's theory. That's the problem. It's when somebody's teaching you, if they're going to teach you something they've never done, they're teaching you theory, and that doesn't work. It just doesn't work because they don't have real-time experience. But that's what I would just tell everyone is
get the references.
You got to get references.
Get the testimonials.
If you're hiring somebody to work for you, somebody wrote in there. You can. If you're going to hire somebody, check references. If you're going to pay somebody for their expertise, Marky Mark, right? Was it Mark Wahlberg, right?
Yeah,
Mark Wahlberg. The guy's super fit, super great shape, and it's something he said, very simple. He said, "I'm not going to hire somebody I'm not going to hire a fitness trainer that's not in better shape than I am," right? You don't hire somebody that's not in his, if you're going to, you want abs, the guy that's teaching you should have abs, right? Anyways, that's all. But, hey, we got to get ready. We're going to, hey, Lou, glad you're here. Success, yes, we're going to do the first informal class is today. It's going to start in about 10 minutes, actually. So go to FlipAnythingUSA.com, get in, sign into the membership. The link is in there. The link is inside where the members are. And you'll come in, and Chris will be letting you in, and we're going to get that started right here in just a couple minutes. So we'll see you guys in the Zoom class, and everybody else, please get the book, Wake Up and Smell the Real Estate. This is how I made my first million by 28, and I've been doing it for a long time. And I'll probably do it till the day I die because it's really not hard. It's just about using your head. So we'll see y'all later. See y'all. Oh, hey, Ellie. Ellie, get in the meeting. Come to the meeting.